Assalamualaikum and hi, my name is Mayzatul Shahirah Binti Khalid. I'm from JIBA2E. Let's into to the introduction first. Malaysia operates under a dual financial system, combining both conventional and Islamic elements. This system reflects the country's multicultural society and Islamic heritage. Within this framework, zakat and tax act as two distinct yet complementary mechanisms for wealth redistribution and national development. Zakat is a religious duty for Muslims managed by state religious authorities, while tax is a statutory obligation for all individuals and businesses under the Inland Revenue Board. Zakat primarily support the asnaf group such as the poor and needy, while tax funds public infrastructure, healthcare, and national development. However, compliance look very different for corporates and sole proprietors. Largest corporations usually have structured system and advisors, but face complexities in balancing zakat and tax. In contrast, sole proprietors often struggle with low awareness and weak record keeping. The study explores the challenge faced, the role of institutions, and the socio-economic impact of zakat and tax. It also proposes ways to enhance compliance, improve cooperation, and ensure that both systems contribute effectively to sustainable growth in Malaysia.
Hi, my name is Saffa Zakki. So I will talk about the case background zakat and tax. Malaysia practices a dual system where zakat and taxation exist side by side. Zakat is a religious duty for Muslim, while the tax is a legal duty under the Income Tax Act 1967. Even though both aim to redistribute wealth and support society, they are managed by different authorities. For corporate entities like bank, oil and gas company, or big firm, managing zakat and tax is more structured. They often have accountants and consultants to ensure compliance. For example, Bank Islam pays zakat through the State Islamic Religious Council while also paying corporate tax to LHDN. This way, corporates contribute both to the community and to national development. Moving on to the sole proprietors, however, experience this very differently. Small business owners, hawkers, and freelancers often lack proper financial records and may not have the knowledge to calculate zakat or tax correctly. When their income exceeds the Nizam, they are required to pay like 2.5% zakat while also filing tax return if taxable. But because of limited resources and financial literacy, many face compliance issues, especially in the informal sector. In short, both corporates and sole proprietors are part of the same dual system, but their reality are very different. Corporates are more structured but face complex balancing, while sole proprietors struggle more with awareness and administrations. This shows the need for a system that is more accessible and better integrated for all types of business.
Assalamualaikum, my name is Nazly. Today I would like to talk about case challenge of zakat and tax, corporation versus sole proprietors. So firstly, is determining nisab and asset. For sole proprietor, often face difficulty separating personal and business asset when calculating zakat, especially with a fluctuation value like a stock or crypto. For corporation, the challenge is even larger as they manage assets across the jurisdiction, including inventory, digital asset, and currency fluctuation. Second, we go to asset diversity and global holding. For sole proprietors, overseas stock or cryptocurrency are raised questions about valuation and jurisdiction. Corporation, on the other hand, face complex compliance because they operate internationally with intangible asset and foreign investment adding to the challenge. Third, we go to technology and asset. For sole proprietor may lack access to advanced tools, relying on manual calculation that risk error. corporation do invest in sophisticated system, but the challenge is align accounting practice with zakat principle, which not are standardized worldwide. Fourth, we go to guidelines and regulatory clarity. Many sole proprietors find zakat guideline unclear for modern or cross-border asset. Meanwhile, for the corporation, face regulatory risk from changing rule, especially for digital asset, and often struggle with inconsistent tax treatment of zakat payment. Lastly, integration of zakat and tax rebate. Sole proprietor may miss out on zakat rebate due to lack of awareness and mismatched payment timing. For corporation, it's planned even better, but still face audit risk, uncertainty around whether zakat is qualified for the tax relief in all cases.
Next, about differences zakat and tax. Both zakat and tax are financial obligations in Malaysia, but they are based on very different foundations. Zakat is religious duty under Islamic law, while tax is a civil obligation under the Income Tax Act. They are also managed by different authorities. Zakat falls under the State Islamic Religious Councils, while tax is handled by the Inland Revenue Board or LHDN. Another key distinction is in their rates. Zakat is usually fixed at 2.5% for wealth and income, while tax is progressive and can reach up to 30% depending on earnings. The beneficiaries are also different. Zakat goes directly to asnaf groups such as the poor and needy, while tax revenue funds national development projects like infrastructure, healthcare, and education. Ultimately, zakat aims to fulfill spiritual obligation and promote social justice, while tax ensures fiscal stability and support the wider national economy. Next, there are two examples for corporation and for sole proprietors. First of all, example for corporation, we can see how zakat and tax play different roles. For example, Bank Islam Malaysia berhak pay zakat on its business income through MAIWP. In 2023, millions were distributed to asnaf, including education aid and welfare support for the poor. On the other hand, Petronas contributes heavily through corporate tax at the 24% rate, which funds national projects like highway and healthcare. Next, for sole proprietors, the approach is more personal. A Muslim-owned small business such as food stall or boutique must pay 2.5% zakat if their income exceeds the Nizam, about 23,000 ringgit Malaysia in 2024. The zakat is channeled to groups such as students, orphans, and single mothers. Meanwhile, a self-employed graphic designer earning 16,000 ringgit Malaysia a year pays income tax to LHDN at progressive rate to 30%, with the funds going into federal budget to support government operation.
Assalamualaikum, I am Hazrul Nizam. Today I will explain about the key issues faced in fulfilling zakat and tax in Malaysia. First, we know that zakat and tax are both important. Zakat is for Muslims to help the poor, while tax is for everyone to support the country. But in reality, many people and companies face challenges to pay them correctly. The first issue is awareness. Many small business owners like hawkers and online sellers do not understand how to calculate zakat or tax. They do not keep proper records and sometimes mix business and personal money. Even big companies also face confusion, especially with new things like digital asset or foreign income. Second issue is compliance. Zakat is handled by state councils, while tax is handled by LHDN. This means people and companies must report to two different systems. Sometimes the rules are not clear, especially about zakat as tax relief. This makes Muslims feel like they are paying a double burden. The third issue is administration. Small traders cannot afford accountants or software, so they use manual calculation, which often cause errors. Corporates have system, but they still struggle to match Shahirah rules.
So next, I would like to talk about institution role for corporate in Zakat. Usually is more structured. Company disclose and pay Zakat through the recognized authorities, ensuring compliance with Islamic principle. It is often reported in their financial statement, which help with the transparency and accountability. For sole proprietor in Zakat payment is more for personal and direct. They are typically interact with local Zakat institution or official to fulfill their individual obligation. While the process is simple, but it still carry the responsibility of contributing to the social welfare and justice. Next, we go through the corporates on the tax. Corporates on the tax is governed by the stated national law. Company must register, file detailed report, undergo audit and make payment to the tax agency. This highlight the structured process, ensure the accountability and help generate revenue for the state. Lastly, for sole proprietors on the tax compliance follow the individual or small business code. This process is less complex compared to the corporation, involving the simple filing and few requirements, but it still fall under government oversight.
Next, the system of zakat and taxation in Malaysia has a strong impact on society, especially when we compare the roles of corporates and sole proprietor. Both groups carry responsibility, but the outcome are very different depending on their level of compliance. On the positive side, corporate zakat has played an important role in supporting the poor and the needy. For instance, large companies like Islamic banks contribute millions each year, and funds are used for education, scholarships, and welfare aid. This shows that zakat is not only a religious obligation, but also a way for corporations to give back to society and create opportunity for a better life. At the same time, tax collection benefit the wider populations, tax fund infrastructure, healthcare, and education, which means every Malaysian, regardless of background, enjoy all the benefits. However, there are also negative impact. Many sole proprietors, like small business owner and freelancer, do not fully declare their income and struggle to calculate zakat properly. This reduces the amount collected for both systems and limit how much can be distributed. On top of that, some Muslims feel burdened because they have to pay both zakat and tax. And since the rebate system is not always clear, it sometimes discourages them from paying. In conclusion, zakat and tax both play vital roles in society. Corporates tend to contribute more visibly, while sole proprietors face more challenges. To ensure the system is fair and effective, more education, integration, and transparency are needed so that both zakat and tax can truly support Malaysian society and economic developments.
Hi, my name is Norhafiza Hana Binti Zahari. I will explain the proposed section for improving the zakat and tax system. First, zakat and tax integration. Through an integrated digital system between the RIB and the zakat center, every zakat payment can be automatically recorded as a tax rebate. This not only reduces calculation errors, but also increase the level of public trust because the process is more transparent, easy, and fair. Second, financial education and literacy. Free training or workshop by the RIB and zakat institution are very important to help small traders and sole proprietors understand how to calculate zakat, fill in tax, and the rebate benefits available. With the right knowledge, the zakat and tax compliance rate can be improved. Third, technology and automation. The use of accounting software or user-friendly application can facilitate the automatic zakat and tax calculation process. This saves time, reduce manual errors, and management costs. For corporate companies, the use of ERP with zakat and tax module can make financial records more transparent, Shariah compliant, and in line with RIB regulations. Fourth, harmonization of standards. With uniform guidelines across the country, the issue of confusion in calculating zakat, especially for modern assets such as international stock or crypto, can be overcome. Consistent standards also make it easier for payers to claim zakat rebates regardless of the location or type of asset they own. Overall, these four proposals will make the zakat and tax system more efficient, transparent, and trusted by the community, thus contributing to the country's economic development.
So the conclusion is, in Malaysia, zakat and tax are two big duties. Zakat is a religious duty for Muslims to help the poor, while tax is legal duty for all to support the country. Both aim to share wealth and bring fairness, but they are managed by different authorities, which makes the system not always easy. For corporate companies, they have accountants and better systems, but they still face complex rules, foreign income and digital assets. Sometimes, zakat is not fully recognized as tax rebate, and this creates audit risk. For sole proprietors, the issue is more about awareness. Many small traders do not keep proper records. They confuse business and personal money, use manual methods and often make errors. This leads to under-compliance. The impact on society is clear. Zakat helps the poor and education, while tax supports schools, hospitals and infrastructure. But when compliance is weak, the system cannot give full benefit. Some Muslims also feel a double burden of paying both zakat and tax. To solve this, we need integration between zakat and tax systems, more financial education, better use of technology and clear rules.